Welcome back. In the last video, hopefully I built some tension. Hopefully I built kind of set up a cliffhanger and anticipation for this video as we talked about fundamental analysis versus technical analysis, and then I alluded to in this video talking about, well, which one should you actually use? In my opinion, this whole debate, especially in the world of Forex, is just kind of unnecessary. It's quite silly, and dare I say, it's just a stupid debate. It's one that doesn't need to exist. Now, don't get me wrong. Should you choose one as kind of the centerpiece of your analysis, one that's just the good old-fashioned backbone of your analysis? Yes, you should absolutely choose one or the other. But should you use both? In my opinion, yes, you should actually use both. And when I say my opinion, I don't want to come across like I'm making some sort of revolutionary discovery and most people don't think this way, but I'm going to argue and present some, groundbreaking argument on why that's... No, the vast majority of Forex traders would agree that, yeah, both definitely serve a purpose and both should be used side by side in conjunction with one another. So it's kind of a situation of, hey, let's just all be friends, fundamental traders, technical traders. Let's, circle up, sing Kumbaya, and let's just, help each other out. So in order to really kind of illustrate this, let's look at things from a technical trader's perspective, meaning that this trader has said, you know what, the backbone of my strategy is going to be technical analysis. Therefore, they are a technical trader. And this trader focuses very closely on the euro dollar. So the pair that they're always watching and that they keep a very close eye on, euro dollar. And, that's just the technical chart of the euro dollar. It's like their best buddy. Maybe they print it out and sleep with it at night. They're probably taking things a little too far there. Regardless, they are very focused on the euro dollar technical chart. So the cool thing here for a technical trader is that by using just surface deep fundamental analysis, surface deep being the keyword there, it allows them to cheat in a sense. How do they cheat? Well, by looking into the future, cough cough, the calendar, and locating exact, and they can locate an exact time and an exact date where their main tool, their chart, could start getting some movement, could start doing a little dance. Now, how do they do that? How do they know that? A technical chart does not tell the future. Correct. Nothing tells the future. But by using the surface deep understanding, the surface deep portion of fundamental analysis, just looking at when certain meetings take place, when certain speeches take place, it can give them a heads up. Hey, at this time, on this date, your chart may start to dance a little bit. And that's what's going on here. And, this example comes from an actual event that happened. So, yes, I'm just making up this, imaginary trader that focuses, just on the euro dollar. But in terms of now the information, this all happened. So here is what we would call, a Forex calendar. Now, the big thing here, because I know people, well, what site are you using for that? The site doesn't matter. In this day and age, we have search engines. If you want to figure out, like I said, hopefully 5 years, 10 years from now, this course is still popular and still being used. But I don't know if this exact calendar site is going to be available 5 years from now or 10 years from now. So use the search engines. Just a simple Forex calendar, Forex announcement calendar. Any sort of, variety of that sort of search term is going to bring you all sorts of sites. They're going to tell you all the important things that are going on in the world of Forex in terms of meetings, in terms of fundamental events. These are all sorts of things that a fundamental trader is definitely going to care about. So in our example, well, because the person cares about, the US dollar, they're going to be scanning down here for USD. Now, sure, there's a couple, UR or Europe, trades, or I should say meetings. So German trade balance, okay, yeah, there's some. But right now, and this is why headline reading is important even for the technical trader. Right now, as it stands right now at the time of this video, in the headlines all the time, the hoopla is all about interest rates this, interest rates that. Is the Fed going to raise interest rates? Are they going to hold interest rates the same? That's all the hoopla. Again, I'm not saying you have to dig through and read, chapters and chapters of books and be going to the library and be just digging through the Wall Street Journal. Yeah, you can go through the Wall Street Journal, but just read in headlines. And if you were to be doing that, which you should if you're going to be trading Forex as a technical trader, scanning the headlines, that interest rates as it stands right now, very, very hot topic out there. Interest rates have been low for a very long time. And now, there's lots of talk is, hey, is the Fed finally going to start to increase them? Or in other words, are interest rates finally going to change? Now, this has to do with America right now. But if you are watching this and you are Canadian and maybe you have, a different set of, a different technical chart that you're watching because you're looking at a different currency pair, then you're going to be very interested in those sorts of, dynamics that affect your currency pair. But again, there's no holy grail. There's no magic bullet. For all we know, this meeting up here, I don't know. Let's just pick a random one that has, okay, so, the Swiss unemployment rate, which is being announced, at Friday, September 9th at 1:45 a.m. Eastern time. For all we know, maybe that's just some sort of number, and then all of a sudden that starts to influence how our currency pair trades. I mean, the odds of that, I don't really see that happening, but as I alluded to in the last video, that's the whole thing with fundamental analysis. You can learn all those economic concepts, and then all it takes is something just weird to happen, and all of a sudden things shift a little bit, but then shifting a little bit, that can change all sorts of different things. So there's what I really want to come across, or what I'm trying to get at, is this image right here. There's no guarantee that just because you do this, that everything's going to work out perfect and you're going to make tons of money all the time. The point here is that this is how fundamental analysis can jive alongside technical analysis. And, the other point, I don't want to come across as if you're going to technical trader, then you got to start to, go get a PhD in economics. No, be a headline reader. Read the headlines. They're all over the place. I mean, again, what websites are popular? You're going to know. At that point in time, there's always financial websites out there. And, again, you use the thing on top of your shoulders. If you're curious about Forex news, maybe run a Google search for Forex news, up-to-date Forex news. Most brokers have news sources that are always going to be spitting out news to you, so you can be up to date on all the current news. And again, just headlines. So yes, as technical traders, we need to use fundamental analysis in a couple ways. One, just the simple, always be in the headlines, just having a general idea what's going on. Going back to our example, right now, interest rates in the United States, very, very hot topic. And why do we care about interest rates in the United States right now? Well, because in our example, our case study, the US dollar is a big part of, what we're looking at in the currency pair. So keep that in mind. Just lots of ways. There's lots of flexibility here. This is just one way. So I'm not saying that this is the way you have to do it. But if you, as somebody that loves charts, and if you tell me, hey, Clay, you can figure out a way of, pinpointing when the chart you're looking at might start to get jiggy with it, might start to, dance. I would be interested in that. And in the world of Forex, because, the announcements do matter, policies matter, governments matter, all that stuff, it's nice to know when key meetings are revolving. And as far as it stands right now, the FOMC, which as an FYI, stands for the Federal Open Market Committee, which is basically the Fed. Whenever they speak, whenever members speak, especially when the head of the Fed speaks, that's something that from a Forex perspective, you should be paying attention to. Even from a stock market perspective, it's always good to know when those big speeches happen. By no means am I saying that you have to sit here and, memorize, okay, well, the United Kingdom's goods trade balance is meeting here, and then they're having, construction output. So that's way too far for a technical trader. But big speeches, important speeches, you need to be aware of that. Again, how am I defining big? How am I defining important? Well, that's why you got to be in the headlines. That's why you need to be always scanning and just having an idea so you know how to define big. Because at some point, for all we know, again, for another example, maybe at some point in the future, the German trade balance is going to be epically important to, this pair. I don't know why, but maybe at some point in the future, there's geopolitical things happening. There's, other economic and political things, all that stuff starting to happen. So where this would actually matter. Well, now you're going to know that if you're just scanning the headlines, if you just over and over again, the German trade balance. Oh, the German trade balance. Oh, it's just everybody's talking about it. It's in the headlines. Well, at that point in time, you know what? You would want to be well aware of that. The other nice thing here is the headlines also kind of lead you to where these important, speeches are. if you're checking those financial, pages and websites, usually they're going to tell you, hey, markets are bracing themselves for the speech. Well, then you can, what? Wait, okay, markets are bracing themselves for the speech. That seems kind of like a dramatic title. So if you're going to click on that, then they'd explain, the Fed, this member is giving a speech, and they're going to tell you what's going on. So it's not like you have to sit there and comb through a million different, speeches and, meetings and all that sort of stuff. Headlines are very powerful. They're going to lead you to the important things that need to be favored. So just something to keep in mind there, and a quick example of how fundamental analysis can come alongside technical analysis and serve as, a complementary fashion. Don't get me wrong. At the end of the day, the keyword here, or the keyword or the key aspect in this example is technical analysis is the backbone. But by just kind of cheating a little bit, looking into the future, trying to gauge where something may happen, may be in the keyword. There's no such thing as a guarantee. So just because something happens doesn't mean that, it's guaranteed to work in your favor. But hey, if you can kind of gauge when the tool that you're using may start dancing, I think that's very important. So proceeding along with our example, this is what the euro dollar chart looked like right before the announcement happened. We just saw, that announcement was at 8:15. So this is what the chart looked like right before the announcement happened. This is the 15-minute chart. I realize you may have no idea what you're looking at right now. This could look like the Matrix to you. But all 15-minute means is instead of each one of these candlesticks, or I should say each one of these candlesticks, as they're called, represents 15 minutes worth of time. So there's 15 minutes worth of time. There's 15 minutes worth of time. There's 15 minutes worth of time. Here is the last 15 minutes right here before the speech actually happens. And at this point in time, the exchange rate value, that wasn't a very good square, was it? Let's try that again. The exchange rate value is right there, 1.12675, and this is an actual value. So this is no longer theoretical. This is taken right out of the real world. So as a technical trader, you could be looking at this, and one of two things are going to be happening. Because you've used some fundamental analysis, because you've looked into the quote-unquote future, looked into that calendar, you're going to be thinking, you know what? I just want to avoid, the chart right now just because things may get a little too crazy. I'm just not interested. You may be thinking, I'm going to avoid it for a second, but then after the announcement happens, I'm going to start to be very active in it because I want to see what happens. I want to get involved in the trade because I think the volatility and the volume is all going to pick up. So I don't want to hop in right now, but I do want to trade it pretty much immediately after. So that's kind of, I guess there's three camps. So the first camp again was, I just want to avoid this kind of altogether right now because this is just not my style. The second camp, I'm going to avoid it for the time being, but after the ball starts rolling, then I'm going to form some trade plans and, start to trade it at that point in time. The third camp is, I'm very good at managing risk. I know how to, structure, a speculative risk versus reward trade plan. I want to get in right before the meeting and, let's speculate a little bit. If it goes in my direction, then I could be very, very right. I could be rewarded in a big way. But if I'm wrong, because again, no guarantees, if I'm wrong, then okay, I have a controlled risk. So they could set something up where it makes sense, where it answers that question. Remember, what's that big question that that the professionals need to answer? Is the reward that you're potentially going to get, is it worth the risk? So if you structured a trade plan, which is very possible with, technical analysis, where yes, the risk I'm taking for the potential reward totally makes sense. So you could be doing all that right before you have an idea where you have, I'm not going to say a guarantee where the chart starts to really get moving. Again, and I realize this dead horse, but I'm going to keep beating this dead horse. I'm not sitting here saying that all you got to do is look at the calendar, find one of these events, put on a trade, and voila, you're going to have awesome movements. No, sometimes it'll be a dud. Sometimes, oh, well, that was kind of disappointing. Not much happened. Other times, hey, things can go well. But the whole point here is that as a technical trader, it's just good to be aware of, those times where maybe as far as your personal, risk tolerance is concerned, you maybe just want to avoid the situation altogether. So like I said, this is the technical chart right before, the 15 minutes before that meeting, that speech happens. So let's go and see what happens. So here you can see the aftermath of everything. So this is the technical chart afterwards. And I realize you may not understand really what you're looking at, but this implies that the price went down, or not the price, the value of the exchange rate went down, after that meeting. Again, that candle, or this, like I said, these are called candlesticks. So that candlestick right there was the 15 minutes right before that announcement happened. And apparently, depending on how you look at it, I mean, if you were bullish, if you thought the price, or if you thought the value was going to be going up, you didn't like to see this result. If you thought the value was going to be going down, then hey, this was a great result. But by just looking into the future a little bit, quote unquote, using your crystal ball, cough, cough, the calendar, a technical trader would have been able to pinpoint an area where, hey, things could get jiggy. Could be in the key word, as I've been saying. No such thing as a guarantee. But hey, at this point, sorry, you are not 100% pure technical trader, because you cheated a little bit. You gave yourself a little heads up, little warning of when, things may start to, move around a little bit. So in this example, like I said, the value of the exchange rate pretty much crashed. And in the matter of just a couple hours, the value went down 1,475 pips. So if you kind of start to think about that, even if you were just getting $1 a pip, then that would have been a pretty nice trade. Now, that implies that you would have traded it perfectly. So I'm not saying that, but even if you would have traded it half perfectly, I mean, that could have been a very nice gain. So, and like I said, this is not made up. This is as real as it gets. This was all unfolded, right during the time that I'm putting together this video and was putting together this presentation. I thought, well, that provides an excellent real-life example of just how, like I said, let's be friends. Fundamental traders, technical traders, can all be buddies, can work together, and, just make things so it all makes sense. Before I wrap up this video here, we'll focus on one at a time, because now I want to kind of look at the flip side. But key driving point here is, yeah, fundamental analysis has its place alongside a technical trader, but I'm not saying that you have to go and, like I said, go get your master's degree and PhD in sociology and political science and economics and all that sort of stuff. But get involved in the headlines. Read what's going on. Remember, your broker, if your broker has a decent platform, the platform's going to include news, and it's going to spit out news about certain things that are going on. But even with that, that can be overwhelming, because, okay, why it's shooting out something about the German trade balance. Well, reading the main headlines, all those sorts of different sites out there, that's going to give you a good, just overall overarching theme of what to keep an eye out for, and just, you can use that. So if your main driver is going to be technical charts, hopefully you can see how fundamental analysis does indeed play a role. Definitely shoot me an email, or just get in touch with me if you have any questions, because I don't want to wait a minute, but I've always been told you got to use one or the other. This isn't quite computing. If it's not quite computing in your mind, then, like I said, reach out to me, and hopefully I can try to help, straighten things out. But my goal was that, using the whole kind of cheating analogy in terms of, looking into the future and cheating as a trader to figure out when things may come to life. That's a very straightforward and a very wise way, to use fundamental analysis with technical analysis. For those of you that maybe trade stocks and have maybe traded, pharmaceuticals, basically a side-by-side comparison. If you're trading, pharmaceutical stocks, and that there's some sort of decision coming up in terms of, is the drug going to get approved? Is it going to get disapproved? That is a good date to know. That is a good, point on the chart to know, because odds are the chart's really going to start dancing based on that announcement. So that's just a quick kind of parallel example of for anybody that may trade stocks. So the same concept though. Look at the calendar, figure out what sort of big speeches are coming up. Big being defined by what's going on in the headlines, and then you can start to narrow things down and give yourself an idea of when the chart may, or like I said, does exist, but when the chart may come to life a bit.